Stock investors remain cautious, though they are dispelling fears about the US federal debt issue. So sentiment on Wall Street is improving. The benchmark indexes are likely to gain ground today. Investors are alerting new debates about lifting the debt ceiling. Lots of comments from Fed's policymakers, including Jerome Powell, and a series of data on the sentiment among consumers and manufacturers. The US stock market traded sluggishly on a Friday and closed with minor losses. The reason behind the doom and gloom in the market was a decline in high-tech stocks. The Dow Jones closed almost flat, having inched down by 8 points or 0.03%. The Nasdaq shed 0.35% intraday. The S&P 500 slipped by 0.16% to close at 4,124. The major indexes traded higher in the New York pre-market. Futures on the stock indexes traded with moderate gains from 0.14 to 0.27%. The S&P 500 is expected to trade in the same intraday corridor between 4,110 and 4,190 points. The rally of high-tech stocks, which was a catalyst for Wall Street, is coming to an end. After an upbeat season of corporate reports and the hype about artificial intelligence, high-tech stocks closed last week with losses. Tesla shares dropped by 2.3%, reversing after a 2% climb on a Thursday when CEO Elon Musk announced that he found a new boss for Twitter. On a Friday, he clarified that he wants to hire the ex-advertisement director at NBC Universal. Apple and Amazon shares were the biggest drags to the S&P 500. The high-tech sector of the S&P 500 declined by 0.2%. At the same time, the high-tech index has jumped by almost 22% for the last year. The economic calendar also dampened optimism in the stock market. The Consumer Sentiment Index by the University of Michigan fell to the lowest rate in 6 months because the burning issue about raising the federal debt ceiling worsened fears about economic prospects. Investors are worried that aggressive monetary tightening by the US Fed could push the economy into recession, and Fed policymaker Michelle Bowman said on Friday that the central bank would have to increase interest rates again if inflation remains too high. News Corp shares surged by 8.5% on Friday after the media giant reported a higher-than-expected profit. First Solar shares skyrocketed by 26.5% after the solar panel manufacturer purchased Swedish solar film manufacturer Evolar. The Dow Jones slipped by 1.1% last week and the S&P 500 shed 0.3%. But the Nasdaq climbed by 0.4%. The New York pre-market was a bit more optimistic. Investors regained cautious optimism in the light of the news on a probable deal on raising the US debt limit. The standoff on Capitol Hill, which lasted for a few months, fueled fears about the global economic conditions. In a new report by Congress, lawmakers underscore a grave risk of a historic default, which could occur in the first 2 weeks of June. Joe Biden stated over the weekend that he appointed a meeting with the lawmakers on Tuesday, and he's optimistic about a deal on raising the ceiling of the national debt to the tune of $31.4 trillion. The US president said he was confident about a wise decision. His belief is confirmed by the data from the S&P Global as the cost of the insurance of the US sovereign default surged to the highest level since 2009 and now stands at $7.20 per every $100 of treasuries. Apart from the debt ceiling, investors are digesting George Soros' decision. The billionaire investor sold his stake at Tesla. Soros bought his stake in the second quarter last year when Tesla shares traded at $274 apiece, and he sold them in the first month this year when shares are traded at $173 apiece. So Tesla shares lost 0.4% in the pre-market. The billionaire decided to invest in shares of Netflix, Uber, Qualcomm, and cloud computing-based company Snowflake, which was purchased by Warren Buffett in 2020. The high-tech sector as such is on a sound footing in 2023. Bank of America reported that on the week ended May 10, high-tech funds recorded the biggest inflows since December of 2021. The fresh index by the New York Fed pointed to a gloomy picture of the U.S. manufacturing sector, and the New York Empire State Manufacturing PMI unexpectedly sank to minus 31.8 in May, following a 10.8 in April. Economists had projected the reading of a minus 3.75 points. The fresh figure is the lowest one in the last 4 months, indicating a sharp decrease in the manufacturing sector of New York following a considerable growth in April. Apart from a red-hot macroeconomic data, investors will be alert to the comments by several Fed's policymakers. Raphael Bostic from the Atlanta Fed stated that he did not anticipate any rate cuts this year because inflation was likely to be more stubborn than expected. Nevertheless, he is ready for further monetary tightening until the year end rather than rate cuts. Besides Bostic, investors will absorb remarks from Austin Colesbury, Neil Kashkari, and Lisa Cook. The cherry of the cake will be a speech by Jerome Powell delivered on Friday. Shares of Chinese companies listed on the U.S. exchanges, including Alibaba, Baidu, and JD.com, climbed by 1.9% and 2.9% amid hopes for extra stimulus measures. Alphabet fell by 1% because Loop Capital downgraded the company's rating to hold from a buy, and Meta shares grew 1.2% after the brokerage company upgraded the rating to buy from a hold. The euro and the pound sterling opened this week with an upward retracement. Both of them rebounded from lows, thus putting pressure on the US dollar. Its index shed 0.2% intraday to trade at 102.40. The intraday corridor for the instrument is defined between 101.90 and 102.70. On a Monday, the US dollar retreated from a 5-week high following a robust rally at the end of last week. Despite a recovery to 102.70, the outlook for the greenback is not rosy. Of course, investors flocked to the US dollar as a safe haven asset on the back of the federal debt issue and the credit crunch. However, the bullish outlook is an open question. The greenback's rally is unable to grow of treasuries and the hawkish Federal Reserve. Fed policymakers still advocate for the hawkish rhetoric, unwilling to proceed to rate cuts. Curiously, the market is certain about a decrease in interest rates by the year end. Meanwhile, fears about a technical default are waning, but a recession remains a realistic scenario. Fed officials believe that if the recession scenario comes true, it will be soft. The unemployment rate at 3.4% is at the lowest level in more than 50 years. citing Rafael Bostic, if this indicator goes up amid easing inflationary pressure, the economy will remain strong. A recession is not suggested in the Fed's baseline scenario. Should it occur, it will hardly be long-lasting and profound. All in all, bearing in mind the Fed's hawkish rhetoric, the outlook for the US dollar is bearish for the nearest months, especially if the technical default issue is settled successfully and promptly. The Canadian dollar is also regaining its footing against the US dollar, having slipped by 0.3%. The USD CAD pair is now trading at 1.3500, and the instrument is likely to trade in the intraday corridor between 1.3470 and 1.3530. Apart from the soft greenback, oil prices support the commodity-reliant loonie. Oil prices rebounded on Monday. Brent futures rose by 1.3% to trade at $75.18 per barrel, and WTI climbed by 1%. Both benchmark rates closed last week in the red for 4 weeks straight. It's the longest losing streak since September 2022, and the market sentiment about energy demand remains muted because of a patchy economic recovery in China and signs of a slowdown in the United States, and there is also no clarity about crude supplies. OPEC and its allies announced in April that some exporters will make extra output cuts roughly by 1.16 million barrels per day, so that the overall cuts will be 3.66 million barrels. Interestingly, Iraq does not expect OPEC to introduce more production cuts at the summit on June 4. Moreover, at the summit on May 1921, the G7 leaders may adopt new measures targeted against the evasion of sanctions through third parties, and this decision might influence oil prices at the end of the week. The battered Bitcoin is licking its wounds after heavy losses last week. The flagship crypto recovered to 27,300, having gained 1.5% intraday, and the asset settled at the level. The popular tokens are trading mixed today. Ethereum rebounded by 1.6% to $1,827. Solana, Ripple, Binance and Litecoin are trading in the range of -0.9% to +5%. Bitcoin has found a new comfortable range between $26,750 and $27,750. Make profits with the InstaForex. Subscribe to our channel and follow news with us, and see you online tomorrow.